joining in on the program with me is Mr. Ajay Bijli, Managing Director of PVR Inox, and we're also joined by Mr. Gaurav Sharma, the Chief Financial Officer of PVR Inox. Warm welcome, and thank you so much for taking the time out for this discussion. Mr. Bijli, I'm going to be starting off with you. I do know that you marked out already in your press comments that the year has turned out to be an uneven one with staggered and constrained releases from both Bollywood as well as English content. But by the end of the fiscal year, you actually had that, release of Chava. That was a highest grossing film as well. So tell us, how was the quarter for you? Did it meet your expectations? And how's the outlook looking like now?
Well, quarter obviously did not meet our expectations. Chava definitely helped, some of the numbers and the occupancies and footfalls. But definitely some of the big movies got shifted, like Sitare Zameen Par was supposed to come, Houseful 5 was supposed to come. Hollywood releases were a bit muted. And but this year, but we always expected the last year not to be very good because we knew that Hollywood was going to get impacted by the strike. And Indian Hindi films especially did not have any Amir Khan movie, no Shah Rukh Khan movie, no Ranbir movie, no Hrithik movie. So none of the big stars released any movie. In fact, the two movies that did do well were Vicky Kaushal and Raj Kumar, who they're also big stars now after the performance of their movies. But this year, Amir is coming after a long time on the big screen. The Sitare Zameen Par, War 2 is coming. Houseful 5 is a very big franchise which is coming. So we have got some big lineups of Hindi movies as well as English. Mission Impossible is releasing next week. We've got Jurassic Park again rebooted, Avatar. I'm so very excited by the Apple. Apple otherwise is almost like it is a streaming platform. They're coming out with a IMAX movie on Formula One on the big screen with Brad Pitt and lots of these horror movies like Conjuring and all. Also, Avatar is coming in December. So I think Hollywood is very important for our circuit because of the premium formats that we've got of IMAX, 4DX and all. And plus, that's where you get an uptake in the ticket prices as well. Regional remains strong. We've got one, Kantara 2, a very big franchise. Last year, Pushpa 2 was a very big franchise that did well. And then Toxic is coming off Yash. And then one Kamala Hassan movie, one Rajnikant movie, which also got a cameo from Amir Khan. So I think overall regional also coming in the same strength as last year. This year is looking very good.
Okay, this year is looking very good, and that's a great way to start off. There was something also that happened this last quarter that all of us were very excited about. You have been already curating your re-releases. This time it was Andaz Apna Apna that I know so many people went back and saw in the theaters yet again because of the kind of impact that had created on a certain generation. How would you really look at, this re-releases in this quarter, the contribution there, and of course, going forward, how are you going to be taking cues from this one?
Well, now I think the audiences have, we've tested the waters. The audiences have tasted blood. They know that re-releases, their favorite films can again be watched, even though they're available for free or at a fraction of a cost at home. So I find re-releases incredibly, very encouraging, doing well because it's a testament to the big screen. These movies are literally available, and when people talk about OTT and all that, this puts all that debate to an end because that means that they are still going out of their homes, paying a ticket price, and buying popcorn, Pepsi, and then watching it on the big screen. So I think now it's here to stay. We will continue to, now we have some method to the madness. We listen to the, what's happening on social media platforms. We hear the noise which is being made, which is the movie that people again want to see on the screen. And we speak to the producers and the distributors and try to get that movie back. So I think it's here to stay. And very excited about this new type of programming that PVR is doing. Gaurav, we did about 160 movies last year.
Yes, sir. We did 160 re-releases, and overall full year, almost 5% of the total admissions, roughly around 75 lakh admissions came from re-releases alone.
Yeah.
Okay.
So it's a big one.
Yeah. And what's the outlook going to be for re-releases? Have you already looked at a lineup that we will be looking at?
Yes, I think we have, we'll continue with the momentum. We have already started curating the slate for re-releases this year. Also, you should realize that re-releases typically act as fillers between big fresh releases. So we will, strategically place the re-releases such
Yes.
that there is the momentum that continues.
Yes.
So it's a strategy that we will build on year.
Okay. So, Gaurav, one more question that I had was on occupancy specifically for Q4. How has it panned out, and how are you looking at it from FY26 base? Where is the band in which you're looking at occupancy stabilizing for now?
Well, I think Q4 occupancy was roughly around 20%. It was a subdued quarter. Other than Chava and Skyforce from Hindi, there were hardly any other films.
Hmm.
Even Hollywood was sort of missing in quarter 4. As a result, the occupancies were impacted. But I think going forward, as Mr. Bijli explained, there is a very strong lineup across Hindi, English, and regional.
Yes.
And occupancies, we believe in our view, are going to be far better in all the 4 quarters. That said, we feel that volatility will continue to be a factor in terms of how the films perform. And as
Yes.
a result, it's very difficult to predict, what will be the occupancies, where we will ultimately end up. But if you look at financial year 23-24, which was the year before that, we did 25.5% occupancy at 15 crore admissions. We feel that, 25-26, in our view, will be better than that year. Where ultimately it settles down, only time will tell us.
Yes. Mr. Bijli, the other important vertical of yours is F&B, clearly. Do help us understand how did you see that contributing to the overall revenue from this vertical? Going forward in FY26, what's the expectation here? We've been constantly hearing from you some interesting trends, F&B beyond the cinema halls, maybe in other malls, in home delivery space as well. You've recently tied up with Devyani too. So there's a lot happening in this space as the expansion. So I just wanted to get some color from you to understand how are you shaping this up for FY26, sir?
Post-ticketed is a focus area anyway. For us, we keep experimenting with different product offerings, price points, promotions, and that quality we want to maintain. And it's a very important part of our revenue stream. But pre-ticketed is something that we were very keen to do, and that's why these tie-ups with certain delivery platforms we have done, and also Devyani. So Devyani is also a very reputed company, and they've got their own QSR brands, and we are cautiously moving into that space. The way we select our properties for cinemas is the way we're selecting our properties for food courts, where the mall has to be good, the tenancy mix has to be good, the location has to be good, and our own footfall projections of the cinemas have to be good. And adjacent to that, we are opening the food courts. So currently, we've only opened one, which was an experiment, and we are happy so far with the way it's going. And we'll be opening about 10 more, and all those revenues will be about pre-ticketed revenues.
Yes.
So I think that's something that we believe that we've already got a captive audience, which is coming to the cinemas. And that will not cannibalize into our own F&B spends post-ticketed. So that's something that we're very excited about.
Okay. Gaurav, if you could also comment on the ticket pricing, in Q4, how was it? And in the new year, what is the average ticket pricing that you're looking at? Is there a room for increasing ticket prices in the new year?
Well, ticket realizations, there are multiple variables that impact. Quarter 4, we saw a 10% year-on-year increase in our average ticket realizations, simply because Chava did exceptionally well. It was a mega blockbuster.
Yes.
Ability to price tickets for a big blockbuster film is far better than a mid or small scale film. And last year again, there were multiple promotions that we conducted. We had maximum number of cinema lovers day and all of re-releases which were at lower prices for value conscious audience. But I believe that ticket pricing, going forward will be largely linked to inflation. And the other big thing which will impact ticket pricing is the mix of films. Hollywood films typically, which are run in special formats like IMAX, tend to be at a higher ticket realizations. So we expect that this year, we will see an increase year on year, and which will be largely in line with the inflation numbers.
Okay. Mr. Bijli, I wanted to also understand from you on the screen additions as well. I believe PVR Inox has opened 77 new screens across 11 properties in the last year. You're now at 1743 screens across 111 cities. So what's the screen addition guidance now that you can give us for FY26?
We're still looking at about 100 odd screens opening next year.
Okay.
We've already opened in the first month, I think. Gaurav, correct me if I'm wrong.
Correct.
About 20 odd screens. We opened in Jabalpur, Raipur. We opened one in Noida, director's cut. And one
Yes.
more we opened
One
where?
in Gurgaon.
One in Gurgaon, sorry, yeah, Elan, of course. Yeah, so we've got already 20 odd screens we've already opened, and around 80 more we should be opening in the coming financial year.
Okay, so that director's cut is an interesting one. It has always been a favorite in Delhi, and now you've opened in Noida and in Gurgaon. What's the plan on director's cut? Do you think there are, many opportunities for you to really look at least tier one to begin with to expand this one, sir?
Well, you see, director's cut has to be in a demographic which is extremely premium, and
Yes.
people who've already got home theaters and big plasma screens in their own home, and to get
Mm,
them out, and because India has a very heterogeneous market, it has market at every price point, so we
correct.
have to make sure that they are not just put everywhere. And so therefore, this particular mall, which is developed and owned and operated by DLF, called
Mm,
Mall of India, it
mm,
already had our 7 screens, normal
yes.
7 screens. It's called
Mm,
IMAX, it's called other formats as well. So there was
that's
a big demand from that catchment that there was no director's cut in that area. So we opened over
mm,
there. But wherever we do find an opportunity, I believe we are opening one in, it's not director's cut, but it's all premium screens, even in Mohali
mm,
this year. And so wherever we find there's a market that suddenly becomes very discerning and wants a differentiated offering. So these some of these smaller towns also we will, but we have to be very careful that all boxes get ticked.
absolutely. Gaurav, help me then understand on the margins outlook, what can we expect? On the one hand, we do know that higher movie production distribution costs is something that you have to really look at. At the same time, when you're looking at expanding your premium portfolio, how do you look at the margin outlook?
So financial year 24-25, we closed at about 8% EBITDA margins, adjusted
Mm,
for Ind AS 116 lease accounting. I think, we run a business which is high in operating leverage. As the footfalls and occupancies improve,
mm,
incremental margin uptake will be far steeper. Uh, we expect that with the improvement in occupancy levels, the EBITDA margins are going to go up only. It's all a function of where we end up seeing the occupancy levels. That will determine where the margins will end. But yes, we are
mm,
pretty focused around control of cost on the fixed cost side, whether it is rentals, electricity, employee cost, and we have delivered a
mm.
very disciplined control over the course of last 5 years, post-COVID as well.
Okay. Got one more thing, and that's on the ad spend momentum. How are you looking at it? And what's your expectation on the ad income going forward?
We are very happy with the outcome we have delivered last year on our advertisement revenues. They were
Mm,
largely flat year on year at about 450 crores, despite of 10% lower footfalls, and
mm,
lack of films from superstars like Shah Rukh,
mm,
Aamir, or any of the big Hollywood tentpoles. So
mm,
that speaks a lot about the work done on the ad sales side. I think this year we will see a significant growth in ad revenues, simply because ad revenues are a function of the buzz and the kind of lineup the films are able to create in the market. And we have got a very strong lineup of films across Hindi and English. So we will
mm.
see a strong growth in ad revenues. Our near-term objective is to cross the 550 crore ad revenue benchmark that PVR Inox as a combined entity used to deliver pre-COVID in financial year 20. So
Mm.
hopefully, financial year 25-26, we look forward to beating that number.
Okay. Mr. Bijli, also wanted to understand a little bit on the debt levels as well, the impact of the asset light model that you're looking at on the capital intensity as well as on the debt levels right now. Do you see further room of reducing from where you are right now?
Well, the debt answer, I'll let Gaurav answer. Question, sorry.
Mm-hmm.
I'll just tell you that we are very excited with this asset light and this FOCO model. It
Correct.
really shows that with the grace of God, that there is recognition of the brand, and
Mm,
like in the hospitality industry, it's been done for a very long time.
mm,
That people, on the strength of their brand, they have other developers spend money on the asset, and they take a management fee. So that is one model that we've got expanding on that.
mm,
Our screen count growth does not decrease, but we are actually earning on our brand and intellectual property. So that's one thing that's exciting. And even the asset light model, we used to always take a cold shell from the developer and then put all the money ourselves in fitting out the cinema. Now it's really a hot shell, which means a lot of leasehold improvements the developer gives to us, even to the extent of 80% at times, and we give them a fixed return. So our capex intensity reduces. So keeping that in mind, keeping the accruals in mind, and yet not reducing our screen intensity, growth intensity. I think we're left with, accruals to be able to repay some of the debt and bring it down. So I think Gaurav can give you the specifics of, yeah.
Absolutely. I think Mr. Bijli has covered most of it. I would just like to add that over the course of last 2 years, we have significantly reduced our net debt levels. Since merger, we were at about 1430 crores. We have now less than 1000 crores, and despite of the volatility in earnings and the drop in margins last year, our debt levels came down. And going forward, as we transition more towards a capital light model and the control on fixed cost, we will see a further sharper reduction in debt levels. So that trajectory is going to continue in the upcoming years as well.
Okay, got that. Also, Gaurav or Mr. Bijli, if you could just clarify, there's some unconfirmed reports talking about how on Bhool Chook Maaf, PVR has sued because the Maddox Films wanted to shift the theatrical release to OTT. What's the update on that front? If you could share with us, sir.
The news is right. The film was supposed to be releasing in theaters on 9th of May, but at the last minute, the producers and the makers announced that they will release it in OTT. We had challenged that decision, and the Bombay High Court has granted a stay against the release of the film on OTT platform. I would like to restrict our comments to that. The matter is still sub judice, and we would not like to make any further comments on this.
Okay. All right, Mr. Bijli, we will take the last word from you on the outlook for FY26. Is it for sure, that we're going to be having a much better year than FY25? That's what we're penciling in as the last word?
Absolutely. No question about it. Because as I said, last year was quite bad, and there are reasons for why it did not, fire. But now every single region, whether it's, Hollywood or Indian films, which is both Hindi and regional, they're all coming out with their best releases. So, and people are also very keen to go out, step out, and enjoy movies on the big screen. So it should be a good year.
Okay, all the very best to you, Mr.
Thank you.
Bijli, and Gaurav as well. Always a pleasure to host you both on Business Today. All the very best, and see you soon.
Thank you, sir. Thanks a lot.
Thank you so much. With that, viewers, we wrap up this very special conversation. Stay tuned on to Business Today Television.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.